Welcome to No Fluff, Just Ideas. This is your host, Sophocles, and we're going to be discussing investment ideas from around the world. So buckle up and enjoy. This podcast is for educational purposes only. Full disclaimer at the end of the podcast. So today I have with me Pon Van Compernolle. I've met Pon when he came to the event I organized in Thailand. Pon is a manager and advisor of funds and clients for over 20 years. He has a master's from the University of San Francisco and an undergraduate degree in economics from the University of Sydney. He's a member of the Thai Institute of Directors and also author of the book 360 Thailand. And I'll post a link to that in the notes. In the book, he interviewed 100 owners and executives of Thai-listed companies. Welcome, Pon, and I'd like to start with that 360 Thailand book before we go on to the investment idea we're going to talk about today.
Thank you, Sophocles, for having me. Appreciate it. The book 360 Thailand, it's very simply, it was my COVID project. We're leading up from 2007 to 2020, first quarter. I was lucky enough to know a very, very well-known investor relations company in Thailand that took care of the investor relations websites of, say, 50% of the companies listed on the stock exchange. And it was a friend who had founded it here. And he had asked me to effectively go and interview all the CEOs of their, who are their clients. So from 2007 to 2019, on 2 times a month, these interviews with the CEOs were published in the Bangkok Post, the Stock Exchange of Thailand's website, Bloomberg, Reuters, everywhere. And then, as you know, we're doing in the middle of lockdown. Other than just trying to trade stocks, we have an extra, some time on our hands. And what we could find, like our friends and I, these are the days pre-Dropbox, so there's a lot of interviews missing, unfortunately. But we still found about 130 of them, and we compiled it. And the one thing I like to say about Thailand, especially corporates in Thailand, you don't find interesting historical information on what the owners and CEOs used to say in the past. And so we compiled a book, 500 pages. It's on Amazon. It's up for sale. I have kids to send to international school. So please buy a copy. And thank you. Until the next time. Pleasure.
My question is, wouldn't it be a problem that, some of the interviews are really old, or it doesn't really matter because you're giving the reader the historical perspective on the person, which is lacking?
It's always interesting to see what people thought they were going to do with their business a decade ago, 15 years ago. And it's also interesting to see which companies still exist. Like there's 1 or 2 that have disappeared from the market or been delisted. Some companies have also had, which is very rare in Thailand, but changes in major shareholders. So when you're able to go back and you talk to them one more time, and then you see, okay, it may still be the same industry, it may still be the same business model, but with a new management team and a fresh perspective on how things should be done or could be done in their ideas. But at the end of the day, it's just interesting to go back to have a look at things.
And you can do a follow-up book, which, who failed, who succeeded, and why, and then like a new interview with them.
It has crossed my mind, but I'm very happy living in Bangkok and I prefer not to be kicked out.
Okay. Well, let's move on to Indonesia, because we're not going to be talking about a Thai name, but we're going to be talking about an Indonesian name, which goes by the name ASSA, or Adi Sarana Armada.
Yeah.
So what's your elevator pitch on this case?
I call ASSA a beautiful turnaround story in terms of profits and numbers. They got 3 businesses. 1, they are the leading corporate vehicle rental company in the country, 40,000 units per year leased out to M.Cs mainly. 2, they are the only end-to-end logistics company in the country of Indonesia. And then 3, they have, during towards the mid part of COVID, started the used car auction business, and they already have 40% market share, and that's growing rather rapidly. So the elevator pitch is very simple, that they overinvested during COVID, like most people did, in their logistics business and everything else. But as they came out of it, focused on profits, you could see that I think third and fourth quarter are all-time high earnings for the business. First quarter is likely going to continue this wonderful Nike swoosh trend. And then you would say that it's trading at 3 times earnings next year. So it's like one of those beautiful things when you do a quarterly EPS versus the share price. The share price has just gone down like here, whereas the earnings per share is just so.
Okay. But who's behind this? From what I understand, the majority of the shares is owned by the founders.
Yes, that's correct. Correct. And it's a gentleman called Park Brojo. He's led the company, I think, since 2012. His background was he used to work for Toyota Indonesia groups, and then he came to set up and run ASSA. And he has been doing a wonderful job, consistent growth over the last decade and a half. Rarely seen an Indonesian company with very minimal funny business, let's say, especially one at this market cap size. It's a market cap of 100 million US dollars. So it's been quite a steady business. I won't say an amazing compounder, but it's just done steady business over the last decade and a half.
Okay. I think you answered what I was thinking about. No funny business. So I'm going to say no past crimes, politically connected, maybe
None.
None?
Officially none.
Officially.
Yeah, that's what we know. AI hasn't found anything on him either, so it's okay.
Okay. You said they overinvested during COVID. I'm just looking here at some of their stats. It looks like they've gone through an investment period. Probably last year was their biggest CapEx expenditure in their history.
What I will say is during COVID, you see that they launched for food delivery and logistics, effectively, last mile delivery services. So that was a business that was doing rather well during the COVID era in 2020, 2021, which is why you saw at one period their earnings did very well. Naturally, as things reopened, they went, we've lost all of our business, and all of a sudden profitability disappears from 1/3 of their business, from one of the 3 business units. And then they decided to refocus and effectively merge a few of the logistics arms together and make it a proper end-to-end business. And so that's why you started to see that the real turnaround is coming from the logistics business plus the growth of the used car entity. And they're at all-time high earnings.
So in order to make this simple for people listening, let's go over the three businesses. So we have the car rental, the logistics, and the used vehicle. So the car rental business, is this like Hertz? Can you talk to us about it?
It's a corporates for MNCs, for multinationals, are their main customer base. That can be your Unilevers in Indonesia. That can be any one of the mining giants, any one of the Japanese firms that are there. They are the major customers for ASSA's corporate vehicle rental. Let's just say that I believe in 2024, the number of vehicles they had out on lease were about 32,000. A decade ago, it was at 15,000. Right, so basically the story is that it's cheaper for a multinational to lease a vehicle. There's no capex risk. ASSA rents it to them for a period of 4 to 5 years. They take it back and then they sell it on secondhand and they make a small capital gain that way. And this type of business only typically grows between 5 to 15% a year, depending upon where the country is on an economic cycle.
Okay, so they don't have any individual revenues. I think don't they have a small amount of individual revenues from this online car sharing business that they have?
Oh, tiny. That's tiny. That's tiny. You'd think 99% of it comes from corporate vehicles on the revenue side.
Okay, so have the corporate vehicles. I understand they also have some driver services as well, so you can get drivers as well. Is that right?
Oh, yes, so that's that. You can arguably say this is a value-added service of being a corporate vehicle company. If you want to make a better margin, you provide drivers to the executives of these MNCs. Another reason that why MNCs seem to like having drivers for their executives who are there for 3 to 5 year periods is they don't have to worry about insurance risk in terms of potential road accidents. So it's safer for a multinational to use a corporate vehicle rental company.
Isn't this a risk, though, also, though, to ASSA? Let's say there is an accident and then the multinational company sues them because it's their driver?
I don't think so. No, I haven't seen this risk appear anywhere in the region. No, nowhere in the region. Because also then ASSA would say they could unfortunately they might put the blame on the individual as opposed to the company, right? It's a function of the region of the world we live in. That's business practice. Two, more on a more positive manner, let's say if there is a small accident in the vehicle, the company will replace it immediately for the M&C. So the M&C is going to always be well serviced.
And it's probably ASSA gets better insurance rates because of how many vehicles they have.
I'd imagine so. I'd imagine so.
So it's kind of makes sense. So a corporation, they rents from ASSA, they don't have to buy the car. They are upsold on the driver, and the corporation likes that because then they don't have to hire a driver. And they don't have to pay, I don't know, Social Security or whatever. I don't know how Social Security is in Indonesia, but it can be substantial here in Europe, and other benefits as well. So they gotten rid of that. So that sounds like a pretty good business. I mean, aren't there other people doing this, or have they just gotten so big where no one dares to compete against them?
That they're too well run a company. It's very difficult. I haven't seen anyone successfully try to come in to beat them in the last decade. I can't really think of any company that has come in to successfully compete with them, even taking a little bit of market share. Because I think it's at the end of the day, they already have the formula so well executed that voila, it's done. Plus, on top of that, because Projo came from Toyota, the majority of the vehicles themselves come from the Japanese companies, auto manufacturers. So they already have this relationship, and it is very difficult to break into these type of relationships, right? If Toyota, Honda already like doing business with one group, that's unlikely they're going to shift.
And then these cars themselves, you said they lease them out for a number of years. I think I remember from your presentation in Thailand that it's about 4 years, and then they sell them. How do they sell them?
But in the past, they would just sell them to the secondhand dealers to auction them. Now, with the new business unit, they can also sell them through their own auction houses as well.
Okay, and that's the other segment.
But the one interesting accounting more than anything else, it's because they depreciate these vehicles over a period of 7 years. So whenever they sell them at the end of year 4, you would see that they typically make 40 to 50 million per vehicle sold. So that's just it's great accounting cash flow. I mean, it's great accounting profits on top of having additional cash flow that allows them to keep recycling and growing the business.
Okay, so they're making money off of the cars as well as making money off of leasing the car and upselling additional services like driver. Okay, so then we've got the other segment, which is the logistics. So did the logistics start as part of the other segment and then they separated it out? Is that?
No, they started independent to capture their last mile delivery, food delivery, package deliveries for B2C, especially during 2020, 2021.
Yeah, the growth there is very impressive. I mean, it looks like that over the last decade, these numbers are right. The logistics is compounded at 29% a year. And it looks like logistics margins have expanded significantly, making it what was a tenth of the profit, it seems, of the vehicle leasing. Now they generate almost the same amount of profit from logistics almost as the leasing does.
That's what full year last year's earnings, correct?
Yeah. Some incredible growth there, because that's changed a lot since COVID. They've practically almost 10x'd their operating profit. It looks like, from their logistics. I mean, what is that, because they got more scale, or what drove that?
What the profit improvements?
Hmm.
That came from, so during COVID, effectively, because they saw a huge amount of business. So they were doing, not only were they doing last mile, they were also doing first and mid mile. And their fleet of vehicles, from what I remember, was as high as 1,800 in 2021. And by the end of 24, I think it was down to 1,500 vehicles. At the end of the day, they focused on operation efficiencies, right? They didn't just focus on scale. They focused on looking at it as a core business that shouldn't be funded by the corporate vehicle rental business. It should be self-funded. And they were able to successfully implement business practices that allowed great cash flows to come through. And that resulted in what you said earlier, which was a third of last year's business was from the logistics arm. So you have to take into account that logistics arm only started showing great numbers in the second half. So if you could say going like it's the first half was, if you combine the two together, the first half was maybe 25% of the full year. The second half was 75% of full year earnings. So it's a few factors. One, they focus on the right customers. Two, they've got even something straightforward like a halal certification. Three, they were able to get the cigarette companies like Semporona as a customer for them with the warehouse side, which is very rare for Semporona to use.
So I'm just going to note here, we had some technical difficulties, lost part of the recording, had to come back, but we last left it off at the corporate vehicle rental, where we described the business as the market leader in Indonesia that leases cars to corporations, upsells them with drivers and other services. And after a few years, around 4 years, they sell the cars and they actually make a profit of about 40 to 50 million per car. Now, the next segment is logistics. One of the things we talked about is how big logistics have become, and they generate about a third of the operating profit. And Pon was telling us that a majority of that jump in that business happened in the second half last year.
So, okay, I would quickly start again from a bit of the beginning for the logistics part. Effectively, during COVID, they expanded rather heavily, as in increasing their fleets of vehicles, trucks. Like when you just combine everything together, trucks and for first, mid, and last mile businesses on top of the warehousing, doing both B2B and B2C. And so they did very well during the COVID period, and you can see like a earnings per share up in 2021 was as high as this, and then it just came down because of reopening as an overall group, and now it's picked up again. And the reason it's picked up again is that there's multiple factors for it. One, they trimmed their fleet. I don't remember off the top of my head. I think they were as high as 1,006, 1,007 total vehicles 3-4 years ago, 2021. The end of 24, I think they were down to 1,000, 4,005. Right. On top of that, they have done basic things such as getting halal certification, doing cold storage services for the first time. One of the first players to do it in Indonesia, which is great for FMCG companies. They also were able then to get the cigarette company like Semporona as a customer. And Semporona very, very rarely uses third-party logistics companies. You would effectively see that for the large local corporations, it's only really in the last year or two that you start to see them outsource a bit to third-party logistic players. One reason I think that this business is very interesting is if you had been to, let's just say, Jakarta or Surabaya pre-Jokowi, the amount of infrastructure that has been built over the last 10 years is amazing. So the joke I used to make is that before it took me 24 hours to get from Jakarta to Surabaya by car. Now it takes 8 hours. And I think I gave a whole like analogies in the
Asia Valley Conference. So the top of my head is like Bangkok to Chiang Mai is the same distance. That's 8 to 10 hours. I think London to the southern tip of Scotland is 8 to 10 hours. So just imagine it used to be 24 hours, 3 times, And as a function of better infrastructure, what you get is, it's easier to do business. You need a warehouse. People open new real estate. They do new convenience stores, et cetera, et cetera, et cetera. And then now you have the ability to expand throughout a country. In order to expand very well, in the past, the big guys would have done it themselves. So then they realize that's no longer cost effective. It's better to also utilize third-party players such as ASSA. So I am looking forward to seeing how well this company would do over the coming years.
Yeah, I have to remember, I've been several times to Jakarta when I worked for the emerging markets hedge fund, and I remember how bad the traffic was. And
back then, I don't say it's amazing now. I mean, it's still awful, but compared to what it used to be, you don't get stuck 3 hours without moving at a U-turn anymore.
Oh yeah, that's what I remember. I remember falling asleep and waking up, and we're still going back to the hotel.
Yeah, that doesn't happen anymore. The locals say, "Oh, I'm wrong," but no. Compared to what it used to be, it is far better.
Okay, so the improved transportation, roads, etc., has allowed an expansion of business, which requires then more logistics, which sort of benefits this company, which has turned around a great deal its operating profit. So any specific things they did beyond the addition of businesses during the year, which actually helped to improve the operating profit of logistics, which seems like it went from negative to positive?
I think it was mainly on the cost side. On top of, yes, they did grow revenues by, I think last year, 40-ish% for the logistics business. And that has naturally then driven everything up on the profit side as well. But like I mentioned earlier, they reduced their fleet. They focused on return on capital as opposed to just trying to go out there and capture in the entire market when money was cheap during 2020, 2021. And on top of that, what I don't think they've said publicly, but in reality is that they were using the corporate vehicle business to finance the logistics entity. Right? At one point, that has to stop. Now it's self-financing and is doing well. So
now they don't own the entire logistics business, is that right?
That's correct. Yes, they do have partners in there.
Mm-hmm.
What was it? I think recently, I don't know off the top of my head, I should, but a large local group took a stake in it last year as well.
Okay. So there's a potential then for the logistics segment maybe also to be spun off as an independent company, as they did with the last division, which is the used vehicle division, which operates as a separately listed company. How did that come about? Because it's not that that business is actually smaller than the logistics business, yet they cut off.
This Indonesia, I can't explain everything that happens there. I can't explain everything that happens there. I mean, it's a ridiculously small. It's like ASSA is $100 million US dollar market cap. ASLC is even smaller, and it is listed, but it's there. My elevator pitch for ASSA is that it's 3 times next year. If you want to take a really, really nice, fun PA punt that's only $1,000, you could put into ASLC because it's probably at 1 times next year's earnings.
Yeah. Okay.
But there's zero liquidity there. I mean, even for a PA, even for, say, a 20-year-old PA, it's like zero liquidity there. Yeah.
What is this used car business? Is it just online? Is it physical?
Mainly
Tell
physical.
us about it.
It's mainly physical. I think in total they have, 900 touch points? Oh, no, sorry. How many auction places? They got 35 locations in total. 35 locations. 40% in the market, according to the company. The sellers will come from leasing companies such as themselves, mainly them. It'll come from the finances, the banks, who have to repossess vehicles and then sell them somewhere. Sell them through an auction house. And it will come from corporates as well. So 3 main places. It will come from leasing companies, such as ASSA, from the banks, and then from other corporates. And the way this works is for the used vehicle. Okay, within used vehicle, they actually have two little businesses. One is Caroline, and one is the main one, Autopedia. Autopedia itself does not take on inventory risk. It just makes a fee for the vehicle that comes in and goes out, and they make a fee on it. And so it's a great business. I see it doing, in Thailand, I see the equivalent, and it's trading at a $200 million market cap. And it's only 2.5 times bigger than where Autopedia is, the ASLC, the used vehicle system for ASSA. So you can see that ASSA is expanding, ASLC is expanding quite aggressively. They have, how many? They do 50,000 vehicles a year today. That's both cars as well as motorcycles. So that's 40% of the market. So just round it up and be simpletons. That's 100,000 cars, 100,000 vehicles a year. The reason I like this business a lot is, at the end of the day, you need this avenue out there for the finances, for the financial firms, for the corporates. And there's lots of people who like to buy secondhand cars, such as myself, right? Value. And when I see the market leader in Thailand who has a 50% market share trading at $200 million, and I see this one here in Indonesia, that's doing incredibly well and doesn't have competition. The number 2 competitor is Bluebird, the taxi company, which has started this subsidiary, their own subsidiary doing it. I don't see why they can't succeed. And I can only see them continuing to grow and grow and grow and grow very quickly over the next 2 years, because they take land that's not expensive, and then they are just going to be the first movers everywhere they go. So I really like the way this business is going.
So the one, you said there's 2 businesses. What's the difference? You said the one doesn't take inventory risk. So, and the other, I guess, does take inventory risk. What is the difference between these 2?
I think the difference is the other one is called, so the used car business, the used car auction, which I like, we can call it Autopedia. The other one, they call it Caroline or Caroline. The difference with Caroline is they do take inventory risk because they will buy the vehicle. But then what they will say is that, look, we give you a 1-year guarantee on the engine. We give you a 1-year guarantee on the brakes, a 1-year guarantee on the aircon, suspension, steering. Basically, they guarantee the quality of the used vehicle, trying to then get a better margin as well. But that's only 16 locations, and they don't sell not as many vehicles go through.
Okay, whereas the other one is the one with the 3,000 locations.
Doing 50,000 units a year.
Okay. Okay. So the one is a used car dealer, basically, which also has an online site at the end of the day.
One is an auction house. It's not a dealer. It's an auction house. They only make a fee. And the other one, Caroline, would be, you can say you can call that one a used car dealership that says that they will ensure the quality of a vehicle that they sell.
Oh, okay. So the one's a used car dealer that has checked the car and gives you insurance, and they also have an online website, and you go onto the online website and they got a price. Okay, so Autopedia then is just an auction, and they're the ones that have, like you said, they get the they get from the corporates and do
banks.
On the auction house, do they also get like used car dealers go up there and put cars on the auction platform?
Yes, but used car dealers are typically their biggest buyers.
Okay.
Yeah.
Okay. So, but do individuals also use it, or do individuals just go to the used car?
Not as much. What I've noticed in the region is that it's used cars dealers are the biggest customers, not individuals. Individuals are like single digit percentage of all the volume bought.
So then ASSA has the option to put cars up for auction in Autopedia, or to sell it to Caroline, which takes some inventory risk. And does Caroline also buy from corporates, or is it just from ASSA?
I think it also buys from corporates, but it's smaller percent, because they would want to be more comfortable with the history of the vehicle to provide such a guarantee that for the next year that there are 0 issues, right? They have to maintain brand reputation.
Okay. I see. I see. And there's on the auction house, there's no guarantees or anything. Here's the car.
You walked around, you inspected it, you bid for it. Voila.
Okay.
Yeah.
Oh, wow. Wow. So I can definitely see there being two different types of. So on Caroline, is that also majority from other car dealers buying from, or is that also people being the end
Both.
client?
But at the end of the day, it's still mainly used car dealerships are the biggest buyers.
This car dealership, it grew a lot after, um, 21, because it really didn't do much up until 2021.
Mm.
And then it's like sort of doubled its revenues and has increased from there. Is that because of COVID? Has COVID helped this business?
I would say COVID has helped the management to do new things, and they've been successful with them and to accelerate. So you could argue, say pre-COVID, this company was a bit sleepier or steady, more steady at a 5 to 10% a year growth. And then they were able to get to the size where they had additional cash flow to allocate to new businesses or that are to an extent, especially the used car one, complementary.
So, okay, so we have the leasing company, the logistics company. Does the logistics company do its own then purchases of trucks or vehicles or whatever it's on its own, or basically all three of these cooperate with each other?
Cooperate with one another.
And you mentioned a couple of times that you see this being like forward trading at like 3 times earnings. And is that your estimate based on your analysis? Because I think there was like one analyst who covers this company, but I don't know if that data is right. Or other people, does this company have any coverage?
I think there's maybe 2 or 3 sell side, but not much, because it's $100 million market cap. Perhaps in 2021 there may have been 1 or 2 more, because that's when its market cap reached, say, $300 million. So, and that the share price had gone from 400 to 1,000, 5,006, before coming back down to where it is today at 500.
Okay,
So back then they had a dream, and now it's becoming reality, but the share price is not reflecting it yet. Or maybe I'm missing something.
Do you know why? Have you spoken to people? Why is this thing
why did
so
it collapse? Cheap? Oh, why is it cheap? Well, it collapsed. 1, 2, it collapsed because at the end of the day, the numbers didn't show up as to investors' expectations, which were rather lofty, and to the market's credit, let's say. Earnings per share until third quarter last 2024 was still below its peak in 2021 on a quarterly basis. So it only started to perform as a business again in the second half of 2024.
Mm-hmm. Mm-hmm.
Now, the question is that is maybe on people's minds is that you have not seen a full year, you have not seen 2 years worth of performance. Or maybe you're once bitten, or was it twice bitten, once shy, or once bitten, twice shy, whatever the term is. So it may take another 6 months, 9 months of the company consistently showing that, hey, we have figured out the business model, delivering on the numbers. Debt isn't really an issue for this company. It's a clean owner, but it's a small company which had missed a few things back in 2022. So some people may have a bad taste in their mouth.
Yeah.
And it's a small cap, right? So it has to be cheap enough and exciting enough to go.
Yeah. Yeah. Was there, do the other analysts agree with you with your assessment, or are they more pessimistic?
I can't speak for them, but but I haven't met anyone pessimistic about it on the seller buy side.
Okay. What are the risks here? Because it sounds really, really interesting, but I want to know what can go wrong
as a business
here.
or as a stock. There's 2 different things.
Well, as a business,
you could say, yes, okay. In 2022, there was a risk with the Chinese logistics players coming, and they were coming in aggressive. And that's also one reason why the company had losses. because the Chinese were dumping prices. The Chinese received a tap on their shoulders saying, hey, you can't operate like this in Indonesia. And they've stopped. They've stopped dumping prices, let's say, which allows ASSA to start to do okay again. So yeah, you had some government intervention. You put some tariffs on the Chinese logistic players to make sure they don't screw and ruin a local industry through their own subsidies. But yeah, anyways. But no, there was a risk in 22, 23 that the Chinese came in and basically dumped prices far below cost. And then they're trying to buy market share. So
In which line was this?
in the logistics business, specifically in B2C.
Okay. How do you see their capex going forward? Will it remain at this, what is it, 400 billion? And the reason I'm asking is basically I saw like the consensus is basically for that to double. And I was like, that's pretty hefty. And I'm sure, other people who might, pull up whatever consensus estimates, they might be thinking, it looks like it's going to be negative free cash flow for the next 2 years. But I don't know, when it's just one person. Do you have any thoughts on that? On the
CapEx really come from only two businesses. One is the corporate vehicle, right? So in order to get that figure, you should do a quick back of the envelope. It's like they're going to have to increase the number of corporate vehicles by 30% from where it is today, which doesn't make sense. So I think on the corporate vehicle side, they're only going to expand for 2025, maybe their fleet by 5%, which is a tenth of that number.
Okay, so what do you think about free cash flow going forward for this company?
For ASSA, I think very simple. I think in a year or two from now, if they're at the current market cap, it's going to be giving a free cash flow yield of about 20%.
Wow. But they also have quite a bit of debt from what I see. Is that right?
Well, that's more of a function of the corporate vehicle business, because naturally they buy 5,000 to 6,000 new cars a year, and that's always financed. And then they lease them out to their M.Sc customers, and then they naturally make that little spread. That's where the leverage comes from. It doesn't come from the used car business. A little bit from the logistics, but at the end of the day, the majority of that debt is coming for their corporate vehicle rental business.
Well, it's a good thing they're not borrowing to buy Teslas.
As a quick note, similar to most markets in the region, because as a function of EVs becoming subsidized, or as a function of EV purchases, first-time purchases being subsidized by local governments, say in Malaysia, in Thailand, in Indonesia, and that has led to a slowdown in the overall vehicle market for ICEs, let's say for normal cars. And that had hurt some of the used car business from not growing as well as it used to. But the difference in Indonesia is that they have, as a country, because of a declining currency over time, that means imported vehicles become more expensive, and therefore people will still go to the used car market because it's cheaper.
Wow. It's funny that these incentives are everywhere. We recently were looking to get a car. The EV subsidies, when I looked at them locally here, they weren't enough to make up for how much the car cost. Yeah.
In Thailand and Indonesia, the initial subsidies were ridiculously good for a consumer, as well as good for the Chinese auto players. But now they're less attractive. Governments have finally woken up and said this is a ridiculous policy.
Oh, so that's why
ruining their own market. So yeah. Or you can say the Japanese lobbyists got together and finally did their job.
Okay. So that's why I saw all those BYDs in Bangkok then.
Yeah, it effectively reduced the price by, I think, 25%. So
oh wow,
it was ridiculous. And then they wonder why the Japanese are not expanding in Thailand and FDI is down.
Now, I mean, we talked about a risk, and obviously one of the risks, if you're a foreigner, is Indonesia itself. I mean, how do you feel about Indonesia? The currency's been depreciating. It's like, 16,000 something? I think the last time I went to Indonesia, it was like 8,000. Of course, that was a long time ago.
It's less of a basket case than what it used to be. It's not a Turkey. It's not a Brazil. Let's give Indonesia a little bit of credit, because historically you would say whenever there's an issue in markets, Indonesia is one of the first countries you sell, because that's a currency that will drop 20% right away. And that was even evident during COVID in March 2020. It was one of those countries where, okay, anything liquid in Indonesia, you get out of it first because you don't know what's going to happen to the currency. But as a function of, let's say, an improved governance over the last decade compared to how it used to be, the currency has actually been far more stable than people realize. And just perhaps like now, because there's a new president coming in, the first on paper new presidency in the past decade, there had been some short-term hiccups, or like let's say they didn't manage a narrative well politically. That's what led to like some short-term issues in the currency. But I think compared to where the Indonesia used to be with a massive twin deficits, they're in a far stronger position today than where they used to be. I don't say they're fantastic, but they're much better than where they used to be. So I don't think you're going to see the massive currency depreciation to the dollar like you used to over the last 2 decades. So
I haven't been following this new election and everything. What hiccups were there, and do you have a view of like this new presidency?
the amusing thing in Indonesia is that they elect a new president, but then they take a year to get the ministers in place. So then you still have to do local government elections, and then there's the left pocket. Oh, sorry, I shouldn't. And then there's the negotiations on who should become ministers. And until this is settled, no business is going to make a move on any substantial capex. For the one frank reason, they don't know who to pay. Right? But once the ministers and the people in place are settled and the civil servants are settled, then things become clearer, frankly. And then the second thing is they launched their own sovereign wealth fund called Danantara. And as we all joked, we call it 2MDB. Malaysians are 1MDB, so Indonesia is 2MDB. Because they didn't manage the news flow on that very well. Then they very quickly, pre-Lebaran for them, pre the beginning of April holidays, they started saying, all right, these are the advisors, these are the people going to potentially be running the organization, running the sovereign wealth fund. This is how they plan to manage it, and that settled fears. Because it's a brand new team and a few new structures, people are afraid of the unknown and automatically assume the worst for a country that has a history like Indonesia in the past. So it's up to them to prove that they aren't going to, frankly, screw this up, right? And I think they're doing a better job on the messaging.
Okay.
See what happens.
So specifically with the company, what other risks are there?
Well, the CEO, Pak Projo, he's been there since 2013. While his bench behind him, I think, are actually quite decent, proven to be capable, and in company visits, they're very open to have discussions with. At the end of the day, he is in his mid-60s to late 60s, so it's a question of the energy to drive the business, right? Because if we're being frank about it, most companies sub a certain size are really run by a few individuals. So can he continue to do it in person and in video calls and when they do their quarterly analyst calls or when you go see them? He's great energy, very vibrant, knows every figure off the top of his head. But still, it's a question to ask, right?
Does he have a son or a daughter?
I'm not involved in the company.
Okay.
So,
Okay.
If they are, it's not at a senior position.
Okay. So, I think we've covered pretty much quite a bit of things here, and we can leave it up to the listeners if they're interested to go and investigate further this small cap Indonesian company. I thought it was a pretty interesting case, especially for any emerging market investors. I don't know if you have anything else you'd like to add. Feel free.
But I think if you just need basic ballpark figures for growth, corporate vehicle business, typically if it's in a non-election cycle, you would say they do 10 to 15% growth. Now, maybe last year, 2024 and 2025, you might only see mid-single digits. But after that, I think it'll pick up again strongly. The logistics business, which is now a third of profits, revenue is probably going to be high double digits, and then bottom line is probably going to be a multiple of 5 times that. So that's going to be a massive driver. And then the used car auction. I mean, it's a beautiful. What's the old-fashioned terminology? Oh, not old-fashioned, but the terminology people use before. Blue ocean, minimal competition. It's theirs for the taking. So that one I have, like, if it grows 30, 40, 50% this year, next year, the year after, annually, I would not be surprised. So you put it all together, it's like the core business is going to be throwing off cash nicely, followed by logistics improving on the profitability, and that becomes a bigger portion. And then suddenly you have the used car business. It's growing strongly as well. It's just as an overall entity, if profit is 50% higher 2 years from now compared to 2024, I wouldn't be surprised.
And you mentioned 3 PE stock right now. Yeah. Looking forward.
Okay. Oh wait, last one. And since we last presented in Pattaya, then I think it was 500 per share. It's already above 600 today. So.
Oh wow. So it's already started to move up. I don't know if any of the other guys from the event started buying it.
This is why everyone's got to come to Fat Alpha Asia. These are the names that they're missing out on. These are the opportunities that they're missing out on, Sophocles. There we go.
Thank you for the plug there. And
so
I know just a note for the listeners, I did not pay him. So Pon, if anyone wants to reach out to you, I think I understand there's 2 venues. I think one, you have a blog, right? We didn't mention this, the thaicapitalist.com. That's one word, right? And
that's right.
You blog practically, I think, every day, and you provide some colorful commentary on Thai companies. I enjoyed that, clicking through it. And I know a few other people messaged me and it's like, hey, have you seen Pon's blog? It's awesome.
Yeah, thaicapitalist.com. Been doing it since 2011. It's just, don't take it too seriously in the comments. I have received a legal letter or 2, although I've been happy to push those back. But yeah, it's because there's not many avenues in Thailand where you can find news about Thai companies on a daily basis or a weekly basis. So, and my colorful insights is just me being sarcastic with a dash of truth thrown in there. So,
yep.
Yeah.
And I think the other venue is, so whoever's listening, check out thaicapitalist.com. And you can also leave comments on Pon's blog posts. And I think you're also on Twitter. What's the Twitter handle?
G Van Comp. So that's GVANCOMP. That's my handle on Twitter or X.
Okay, that's great. That's great. Well, Pon, thank you very much. I apologize again for the inconvenience and the technical problems. Thank you, and I hope you have a great weekend.
Likewise, thank you, Sophocles. Appreciate it. Looking forward to the next one.
Oh yeah. Hopefully next year we'll be again in Asia, either Thailand again, or we'll probably either go to Vietnam.
Great, wonderful. All right, have a good one. Thank you.
You too. Bye.
Bye.
The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward-looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and/or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.